Hi, and welcome to the Market Alert for Friday, the 19th of March 2021. So, what a day yesterday. This is probably one of the most interesting days I've seen in a long time. I'll explain as we go through, but obviously the main event was the 10 yield crosses the tipping point, i.e. that 1.75. And as it says here, the pain is just starting to right it is. But I've never seen such overt and blatant manipulation as I saw yesterday afternoon, and this is the man behind it. Fed Chair Powell is a maestro, calming markets when there could have been chaos. Well, there was chaos, and it is incredible what you will see. I recorded it all, so you can see how like I say, it's just blatant manipulation. I'm just going to cover all the other stuff first, the normal stuff. The implied volatility is back up and running, but they've missed out. Where would it be? Wednesdays. But we're at 1774, which you've seen an increase there, which we would have had anyway, whatever the low was on Wednesday that we don't have. So yeah, the implied starting to kick up, and you'll see why this picked up yesterday when we look at the price action combined. Because what I did yesterday was actually overlay the 10-year yield, so you could see the way that they brought prices back, even though the bond market was on the cusp of collapsing, as it were. Speaking of which, you'll see at the moment that the yield is now down to 1.69. So the Fed are in again, trying to calm the markets. You can see there the previous was 171. It's actually 175. But that was the close, of course. So anyway, let's get on and have a look at the overnight markets first and what happened yesterday. So you can see the Dow tried to move the market to the upside yesterday with Powell's assistance, but failed as the market came back to close on near the lows, and the market currently below the 5-bar moving average. We are due for a correction. The stimulation checks, the 1.9 million, the good news is out there. Now it's going to be manipulation if they're going to move the market to the upside, which we'll wait and see. But German DAX, big up thrust for yesterday. I was actually short in this towards the top in a position I wanted to hold. And then that bar steward, Powell, brought the market all the way back up to the entry price, which I'll show you. I've nothing to hide. It was I can see there's a correction coming. I was trying to get a position in this, and I'll find one during today. But bloody annoying when you know that you've called the market right, and then the Fed come in and then reverse the position. So let's have a look where we are overnight. Like I say, I want to rush through this because I want to show you exactly what they did yesterday. So overnight, you can see the market is been in a sideways move, trading up to the 200, then closing back. And as we go through here, you can see volatility's picked up a bit now. We've got near enough a 50-point move or trading range overnight there. So things picking up a bit. We're back to yesterday's low. Very important, which is why you're seeing them buy back here. We've got to get the market back up. But I think any rally to the upside today is going to offer potential for a reversal to the downside, unless, of course, Powell comes in and moves prices back to the upside like he did yesterday. So these are the targets to up and down to S2 if the weakness follows through. And also, again, of course, look at the daily chart, see where the 5-bar moving average is. And also, if we just, I know I'm skipping around a bit here. There is so much to get through today. If we go from here to yesterday's high as well with the fib retracement, we can see we have the longer term fibs, but you can also go from this low here, which has been left behind, to yesterday's high as well, so we can get an idea of where we are. And you can see at the moment we've got this set of fibs here as well, combined with the obviously the 38% from the bigger swing, which ties in oddly enough at 89. So again, watch, you've got a 50% retracement from here to here at the 5-bar moving average, and that number is 14,606. So let's just go to 14.6. 14.6 takes you between the S1 and the S2, as I just said. So watch, if we break the low, this is going to be an important area on an intraday basis. Okay, let's move on and have a look and see what happened during yesterday. So after I recorded, the futures market opens. They were waiting for Lagarde to speak yesterday morning as well, talking of criminals. And you can see that the market was struggling with yesterday, or the high of Wednesday, as prices moved down. And then at this point, you'll see the software update and the news come back in. They changed the link, so you've not had any news in the software for the last couple of days. We've noticed it, we've corrected it, and there was an update sent out yesterday. So you'll see a gap in this in just a moment. And the reason no trades at the moment is because Lagarde was speaking. And straight away, you think, here we go, more BS. And the reason for this is this. So, the hearing of the Committee on Economic and Monetary Affairs of the European Parliament, all of the crooks, and this is the bit here. Today marks the 1 year anniversary of the extraordinary Governing Council meeting. I don't know why they have extraordinary Governing Council meetings, during which we decided to launch the Pandemic Emergency Purchase Programme. Standing where we are today, the economic situation looks brighter, now than it did back then, and we can expect it to improve over 2021. That I will give them, actually, because obviously as people come out of lockdowns and countries come out of lockdowns, then of course you're going to get a bounce. But that doesn't, that's not true economic recovery. In the short term, however, the economic outlook for the euro remains surrounded by uncertainty due to the dynamics of the pandemic and the speed of vaccination campaigns. And it goes on to say that they were going to actually start their purchase of the programme. I can't see it there, but it did actually say it somewhere. So anyway, that was the reason they were going to start their PEPP programme and start buying more bonds. And that's why you saw the DAX spike to the upside there. So that was the reason behind it. Again, another criminal making promises and whatever. There you go. So now I've just reloaded the software and just playing catch up here. So you can see how the market reacted to this. Went back to the recent high that we had in the high in the overnight market, and then held there. So anyway, I'm going to fast forward through this, because then all of a sudden the market started to fall out of bed. And I had a look at the 10-year yield. And as I go through this, you'll see that, as the yield has moved to the upside, heading towards that 175, we had this spike. All of a sudden, I saw this spike. We went from 66, all the previous close was 164, and all of a sudden we're nearly 10 basis points higher. And I thought, blimey, we've got carnage coming. And you can see how the market was then brought back. Lagarde still speaking. And you'll see the yield is pulled back a bit down to 172. And then they managed to get the market back up 89% of the move that it had made in the morning. But we're still sitting at 173. The would-be carnage is not over yet. So what I did, I stayed at the desk and watched what was happening. You can see how they've got the yield down a bit. This allowed the market to move to the upside. And then just as we get towards lunchtime, mid-morning, you can see that we started to go up towards that 175. And this forced the market down sharply, as you'll see here. We hit 175, the figure that JP Morgan was always concerned about. And then prices start to move towards the high. We've got all of the UK central bank news here as well. And then the bonds, or the yield, is once again slammed. You can see how this chart is updated every minute, so you can see how quickly there was intervention here. And then again, prices start to move back towards the downside, sideways, back towards that 175. Again, so at this point already we're starting to see some sort of intervention. Now, I actually sold this way back up here and thought, great, there's no problem now. I'm at the top of the daily chart. The move, it's going to be an up thrust, which it did turn out to be at the end of the day. And all I needed to see was the yield go through the 175. But again, you can see how prices are supported as again they start to try and control the interest rate on the 10-year. So initially the market opens in the afternoon and prices are moved back to the downside, as you'll see in just a moment, as the yield is once again above 175, and we think at this point now I'm thinking great, we're off to the races. But immediately they come back in and buy, and this is what Powell, this is the bit where the maestro stopped the chaos, and this is where it happened, and this was the low. Even though the yield remained at 175, the market traded sideways. You can see there we nearly got to 176, and they just kept bringing the market back. Even though the yield was sitting at that tipping point of 175, this is where the manipulation came in, and you can just see the yield holding at 174, just trying to keep it below that 175 and bring in the market back. And I ended up coming out with a few quid, but wanting to hold this, and unfortunately I wasn't able to be at the desk later on, which is a shame, because the market put in another top. You can see the cluster of volume there, and then started to move back to the downside, which you'll see after we've been to the R2, up towards the R2. So again, you can see exactly what they were doing. It was just absolutely blatant. This market should have continued to have fallen out of bed when it started to do this, when we hit that 175 here. That should have continued down, but as it says here, the maestro came and saved the market. Fed Chairman Powell managed to keep the volatile bond market calm and the stock market rallying during what could have been a turbulent afternoon of trading. It wasn't just a turbulent afternoon of trading, it would have been absolute carnage. But like we're seeing here, it's only been temporary, because the Dow came back and closed on the low, as did the DAX, and at the moment prices are sort of sideways, finding a bit of support at that 38%. So keep an eye on the bond yields. Don't know what will happen here today, but it looks like at the moment they've got them under control, 169. And you can see once the chart loads there how this has been, again, it's being driven down at the moment by obviously the overnight night shift workers at the Fed. But very, very interesting. Something, as I've said before, is broken, but they're not admitting to what it is at this point. The same as on September the 17th, 2019, when the repo market went to 10% overnight. So something's not right, but like I say, they're not going to admit it. They're going to hide this, and they're going to do their damnedest to bring the market back to the all-time highs, and there's nothing to stop them doing that, as we saw yesterday. And I know this very well. Any attempt to actually try and stay with a short trade is doomed. But I thought yesterday we might have seen we did see it break, but unfortunately Powell came in and papered over the cracks and brought the market back. Only then to see that once he'd stopped doing it, the market moving down to close on the lows there for yesterday. Okay, that will do it for this one. Let's see what will happen today. It's certainly interesting times, and like I say, for me, something's not right. Doesn't feel right. But they're not going to reveal that. Obviously, they're not going to admit that they're failing and there is a problem in the banking system or in the bond market. Okay, as ever, thanks for watching. See you in the next one.